Hello and welcome to BQ Prime. I'm Hiral Daria. Overall, if you see in terms of markets, clearly we are seeing an impact in terms of the global meltdown. If you see in terms of Sensex as well, a 470 points downtick coming in on that front, and in terms of Nifty as well, we are below that 16,950 mark already. Pressure coming in from the banking majors as well, a 255-point downtick coming in it with regards to Bank Nifty. To discuss stock-specific action from here on, joining us on the show is Ashish Maheshwari, Director at Blue Ocean Strategic Advisors, joining in. Ashish, good morning and welcome to the show.
Thank you.
Ashish, my first question coming to you is overall with regards to the banking space as a whole. The first question that everyone had in mind is what is that impact going to be with regards to Credit Suisse and its, on the Indian banking majors? Firstly, on that front, and secondly, how are you viewing the banking space?
Yes, as far as credit Suisse issue is concerned, I don't see any direct impact on Indian banks as such, because the kind of product credit Suisse was offering actually, they are not directly lending to Indian corporates as such, and there are no deposit related issues also. So as far as credit Suisse issue is there, I think Indian banks are immune to it. But at the same time, the only problem is this is a cascading effect. Today, one bank is failing. Tomorrow, as the interest rates are going down, so there's tremendous pressure on profitability of European bank and US banks also, because the security that you hold, the value is diminishing because interest rates are rising. So this is, in fact, a contagion effect which is expected or perceived by the market. Then this is why you are seeing a lot of selling in Indian banking stocks also. Because first is counterparty risk may come, because Indian corporates who have opened got LCs against their export from any of these banks, if they come in the problem, then Indian corporates can also have some impact. So nobody is immune in this today's world as such, but direct impact I don't see of credit risk for Indian banks. And as far as the Indian banking sector is concerned, again, one major issue is as interest rates are rising. So now you will see some, first of all, slowdown in credit offtake. Second, there will be pressure on net interest margin because banks have to increase deposit rate, but at the same time, lending rates they can't increase that much. And with the rising interest rate cycle, we have always seen accounts going bad or NPA issues crop up. So, in my view, this is a sector for time being should be avoided, and we need to be more into defensive and other sector where not too much debt is there.
Right. So that's with regards to where the banking sector as a whole goes. Specifically with HDFC Bank as well as HDFC on the approval of the merger, what would your view be?
No, I'm not too excited on this development because there's something like a known event, and this event is now taking place. So I'm quite neutral on this report now, or this development as such. And we are seeing the stock also from a high of 1700. Stock has already corrected by 140 odd rupees. And in my view, it will correct more because one thing we must understand: HDFC and HDFC Bank primarily holdings of FIs, and if they are selling like what we are seeing for last many sessions, stock can't sustain their selling that easy. They're selling that easily. So my view is this stock can drift even to 1500 to 1520 once again. So avoid is my advice.
Right. So that's an avoid coming in with regards to banking counters. But an interesting move in the first hour or two of trade is that from a low of 39.35 that Bank Nifty hit right now, we've already seen a good amount of recovery that has come in. And right now we're at levels of around 39, 342. So almost a 300 points recovery coming in from the day's lowest levels with regards to Bank Nifty. So that's an interesting point that we need to factor in for today's session. Moving there on, Ashish, OMCs have been in focus as well on the way crude has been panning out. Uh, what would your view be? Because good moves coming in with names like a BPCL, HPCL, et al.
Yes, I think this is a sector to be watched for now because if the crude prices are low, whatever the under recoveries were there for last so many quarters, they are going to recover it even fast in faster manner. So, in fact, oil marketing companies looks attractive at given valuation. The market price to book value is also quite attractive, and we have seen in last quarter onwards they have turned around also. Like BPCL made a losses till September quarter, but December and some profit number were there. So, in my view, all these stocks, BPCL, HPCL, IOC, are more defensive kind of bet and can be bought at present.
Right, so that's a buy call coming in specifically from OMC's perspective. Moving on, another stock that is in focus is the Reliance Industries. It's continuously hitting fresh 52-week low. Today's session as well, as we speak, the stock has hit a 52-week low. What do you make of Reliance Industries, and do you think this is a great opportunity to buy the stock? Because clearly, if we have to see a good pullback rally, which is sustainable from here on, participation from a Reliance Industries is going to be absolutely crucial.
Yes, I agree with you. Reliance looks good at this price point, but still the major hurdle here is FI's stake because they are holding still 23% of Reliance Industries. And every quarter we have seen some amount of liquidation happening now in Reliance Industries also. This is the reason, in spite of no sale report by any brokerage, and brokerage was as ambitious of 3,000 plus mark, stock is drifting below 2200 now. So my suggestion will be just to wait for some more time because the kind of pressure we have seen in Reliance, this primarily FI selling as such, and right now domestic investors are not in that position to absorb any big selling in such large cap stock. So my suggestion will be to wait till 2150, then gradually you can build up position. Nothing wrong with the company as such. There's my disclaimer. But as I've shared, FIs are selling, so we need to start buying at slightly at lower rate, not now.
Right. So that's with regards to Reliance Industries. Moving on, you have Patanjali also that continues to be in focus, and they've said that FPO is not on the cards. However, they've clarified their stance as well, and now they are looking at various options. How are you viewing a Patanjali?
No, sir. Only issue is still they own around 81% in the company, promoters.
Hmm.
And market has got that whisker that FPO or any block deal, etc., might take place and which will happen surely at the discount, not at this price. So this is the reason, in spite of quoting very good set of numbers in last quarter, we have seen continuous profit taking happening in Patanjali. And the stock is drifting from 1400 odd levels to 850 labels. So my session will be to wait and watch here. My label for entering into Patanjali will be somewhere between 750 to 775. But for timing, don't enter.
Right. So that's an avoid for current levels coming in. Moving on, Tata Consumer Products also is in focus. The company has ceased negotiations with Bisleri with over a potential transaction, and it has said that no definitive agreement or binding commitment has been signed on this matter. There was a lot of back and forth, a lot of murmur with regards to the acquisition and what it would mean for a Tata Consumers. How are you viewing a Tata Consumers at current levels, and what would your advice be?
So in fact, Bisleri or no Bisleri, stock was at near 52-week low only. So already it shows that a lot of pressure is there in stock per se. And again, the reason is this time we are expecting some amount of slowdown in rural consumption because once record heat is there, people generally don't go too much out and try to consume a lot of liquid as such, and people like to remain more at home. At the same time, this time there's unseasonal rain, there's plenty of overproduction in wheat and
Hmm.
potato and whatnot. So all these factors are impacting Tata Consumer assets. Besides this, their new initiative like acquisition of Soulful and other initiatives will take some time to materialize. This way, we have seen last year to this year, even there was a contraction into EBITDA margin in spite of double-digit sales growth. So my suggestion will be again to avoid Tata Consumer at this price point. My entry point here will be somewhere between 625 to 650, which I expect post this quarter numbers.
Right. Moving on, Rail Vikas Nigam is another stock to watch out for as well. And this is as the company has been selected as a lowest bidder for a composite package of four contracts related to the new broad gauge railway line of Haryana Rail Corporation project. And it's jointly worth around 1,088 odd crores. Railway stocks have been in focus as well, Ashish, on the back of the kind of order wins that are coming in from the ministry, the kind of capacity additions that we are seeing as well. Would you recommend an entry into a Rail Vikas Nigam from here on, not only from an order book perspective, but also from an execution pipeline perspective?
Yes, Rail Vikas Nigam Limited is a good stock which can we hold for a long-term portfolio. This 1,088 crore order was really a good order for them, sizable order. But I'm expecting even such more orders even might come in the month of March itself, where a lot of railways unallocated budget will be given to these companies or orders will be allocated before financial year end closure. So RVNL is a good buy. Numbers wise also they have consistently performing. Even my book value is around 32, so market price to book value is just two at this price point. So I find it attractive buy. And also at the same time, when the turmoil is there in the market, we need to have such a stocks which are more inward looking. They're not too much debt, and there's consistency of numbers, because the chances of fall are there are much lower than compared to buying aggressive beta stocks. So RVNL is a buy in my.
Right. Apart from that, another stock is Coaching Shipyard. Now, that stock is also up in focus in today's session on the back of the 550 crore order win for world's first zero emission feeder container vessel. On the back of this order win, what is your view, and do you think a good entry point for investors?
Coaching is again a good stock, but the stock has corrected by almost 200 rupees from 50 to week high. We have seen. It's a fundamentally good company. This 550 crore order is again a good order for them, sizable order. Besides this, they're into green hydrogen related vessels and new capacity. What they are building is again positive. And we have also seen that in last 1 year, FIs have increased their stake in this company from 3 to almost 7%. So in my view, once uh, stock get in this some consolidation more will happen at 450 to 500 rupees. And once this quarter numbers will come, you will see again stock touching 525, 550 mark, because this quarter is going to be again very good quarter for Cochin Shipyard. So my suggestion will be to add this stock at any fall. 450 is a good price to enter.
Right. So that's with regards to Coaching Shipyard. And my last stock that I want to discuss with you is with regards to an SJVN. What do you make of an SJVN? If you see in terms of the share price, today a 1.5-2% kind of an up move coming in there. Uh, Again, it's been a pretty volatile ride. No major move seen in the last 1 year. It's been pretty range bound as a company. From a business perspective, how are you looking at an SJVN? Because again, they have backed a 200 megawatt solar project in Maharashtra.
If you see, even couple of months back, the stock was at around 40 rupees. And from that level, we have seen around 27, 28 levels once again. And again, 31, 32 levels are there on the stock. This is very slow and steady mover kind of stock, because there are not too many triggers were there at this price point. But again, I like power related stock. As I was sharing, I want or I want to invest, or I'll recommend more stocks which are focusing primarily to India focus story, which are indifferent to exports or a lot of debt or leverage. So with consistent order book. So SGVN is again a stock, but only thing is this is not a stock which will double from here or something like that, but it will give you good dividend yield at the same time. Uh, like if risk is returned, then reward is also limited. So I'm expecting yeah, a price target of again 35, 36, but can be entered at 30 rupees now.
That's with regards to where SJVN is concerned. So overall, a lot of stocks that we've discussed in today's session, good buys, bad buys, or avoids that Ashish has mentioned as well. But clearly, there has been some bit of a recovery that has come in from the day's lowest levels. Where we go from here on is going to be an interesting day to watch out for. A lot of global coverage that BQ Prime will bring to you as well in terms of impact of the global crisis, the collapse in terms of Credit Suisse and UBS coming in. So keep watching BQ Prime for more updates in terms of getting trading bets as well as economy led news as well. Thank you so much, Ashish, for joining us on the show.